This morning for September 18th, let's take a look at the ES first, S&P 500 Emini. Had a pretty great day. Market bled off again in pricing levels. We did get to a point, and I was indicating on the Facebook page for marketlevelsreport.com that the market had just run out of inventory of those that were holding long position supply. And what happens when a market gets to the extreme out of balance for the open interest ratio, it's not surprising to see the market bounce or change directions for a period of time. We came down exactly perfectly, cleaned out the last available supply of those trying to hold long inventory, and the market did bounce into the final part of the day. As a result, the short positions I was carrying still holding over from the previous week. I did take off a fair amount of positions at the 51 evens, right as the market was just about to let go of the last inventory. Since then, now you can see into the after hours session, the market has traded lower, and you can see we've traded down to the 1449s area, but we're still holding fresh long inventory since the bounce yesterday. So this morning we'll probably find out real quick if this inventory holds or folds. If equities gets into any sort of selling early in the day, we'll probably liquidate any of this newly initiated buying that came into the bounce in the end part of the day. So the ES, the upper and lower price levels holding inventory are 1449s up here to about the 68s level. And you can see this is now our current delta volume distributional range, from this point here to this short inventory held here. At this time, we're sitting about, again, 2/3 of the open interest is holding short positions and about 1/3 is long. So that is the current open interest ratio. I would say that this long inventory would unwind very quick if there's any sign of equity selling on the day. Now, if we have US dollar dropping at all on the day, as euro dollar's rallying, then we might get equities in here as a buyer. We could possibly see the ES trying to work back up into its range. Because you have to remember, when US dollars are dropping, very large funds that are sitting on cash, billions of dollars of cash, tend to not want to see that cash dropping in value on the day, and they'll move it into risk, or they'll go and start buying stocks. I like to track the euro dollar, knowing that if it's rallying on the day, then the US dollar's for the most part dropping on the day. So I'll keep watching the euro dollar, see how currencies are affecting or possibly providing the catalyst for equities to come in and be a buyer or a seller. So if we have euro dollar selling off today, maybe selling down into the 3000s level, or if we started to trade down into the 2900s level, we might get equities in here as a seller, because that would mean the US dollar is rising in value on the day. So there wouldn't be a problem with the large fund managers sitting on a very large cash position or cashing out stocks and moving them to cash. So we'll watch that today, but for the most part, ES has traded from one edge of its volume distribution extreme from our recent range extension highs, and has now liquidated everybody that has been holding long inventory from back at this pivot point right here at the 1431s. So all these levels are yellow, and that means it's a dead level. Yellow levels mean pricing levels that no longer mean anything as support resistance because they're no longer holding any long inventory. As you can see, I am showing some short inventory still holding right here off the 1463s. And actually, I could probably put in here another level of inventory being held, an intermediate level being held, tied to the market, this activity last night, with the trade up to, looks like about the 1456s area. So we have a little bit of short inventory held just above our current price level. So that is the situation in the ES. If the ES trades lower today and we let go of this inventory, that will be a market again that will be vacant of any significant held long inventory, meaning the market will be absent of long position holders that could be pushed into selling to cover. So when we go vacant of long positions in the market, it changes the the physics of the supply and demand at the moment that happens, and that is what's called an extreme open interest ratio. The ratio is way to one extreme or the other, meaning everybody's holding short positions and nobody of any significant size is holding long position supply. So we'll be tracking the ES today. On occasion, I do make updates to the Market Levels Report Facebook page throughout the day. So now let's next look at the Eurodollar. Okay, quick review in Eurodollar. Our lowest level of long inventory goes all the way back to the 2760s area. We have stair-step up levels of held long inventory. Just a quick review, 2820s, 2830s, 2880s, and the 2980s area. So that is our current held long inventory levels. Pull this down a bit so we can take a look. So our nearest term level, we have some buyers that had bought that 2980s, 90s area, and that inventory, we have just a little bit of that inventory still trying to hold out. I have indexed a new level where we have sellers that have come in here in the 3120s area and below. So we had the nice push, we pulled back, had a slight range extension as anybody that was a recent seller off the highs unwound and let go. Extreme open interest ratio. Everybody is long, nobody of any significant size is short. Smart money starts cashing out into that. So anybody that's long from lower levels is selling into that. And smart money that wants a directional play is also selling into this as a directional short trade. That has been working out rather well. And as you can see, the market's had a pretty significant pullback since this 3170s, 80s area high. So we're down well over 100 pips at this point, and you can see we are getting long liquidation into the pullback. I would not be surprised when we clean out this level of inventory tied to this 2980s, 90s area that the market may bounce some for a period of time before we get any further downside action. Now, of course, currencies are very news driven. If we get a news catalyst, the Eurodollar, of course, is holding a lot of long inventory, and something happens in Europe that's perceived as a negative, there's a lot of long inventory. If it starts liquidating, could easily keep driving Eurodollar lower. So the current open interest ratio in Euro, if you take a look at it, we're probably about 60% of participants holding long positions and maybe about 40% holding short positions. And the Euro is now pulled back to the 3060s area. So we're kind of right in the middle of the road between near-term overhead resistance, where there's actual held inventory, and just below this in the 2980s, 90s area, about 70 pips down, we have a little bit of long inventory still holding. I would expect this long inventory to let go way before price ever gets to this pricing level. Most likely this inventory letting go would only cause price to come down to about the 3030s to the 3020s. Now if we get news catalysts where we have long liquidation mixed with heavy initiated selling, then the market could get much lower on the day. So I'll be watching the Euro during the day. Right now it's kind of in the middle of the road between recent support resistance levels, and this market is showing some signs of additional long liquidation, where participants that are long from lower levels are feeling like more and more they need to keep cashing out of more of their held long inventory because they're losing confidence that the Euro is going to trade higher. And this trading to a new high and getting rejected and having a open interest ratio extreme and having a complete, strong pullback since then, not surprising at all that we're getting some additional long liquidation in Euro this morning. So again, if there's any interesting updates during the day, I will go over and make those on the Facebook page for Market Levels Report. If you have any questions, contact us at info@marketlevelsreport.com.